The information in this podcast is educational and general in nature and does not take into consideration the listener's personal circumstances. Therefore, it is not intended to be a substitute for specific, individualized financial, legal, or tax advice. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a final decision.
All right. Give me the countdown. Hey everyone, welcome back to another episode of In the Market Trenches. If this is your first time checking us out, I'm Eric Furey, joined with Gary Ribe. We have a great guest for you today. Before I get into the introduction of the guest, remember you can find us anywhere podcasts are available. You can check us out at inthemarkettrenches.podbean.com. Check us out at snn.network. You could also check us out on the SNN YouTube channel. That's youtube.com/SNNwire. We are joined today by Dan Schum. Thank you so much for being here, Dan.
Yeah, thanks for having me.
I'm really excited about this one. We've been readers of your blog for a long time. We always, whenever I get an email that comes from No Name Stocks, I always make sure that I put 10 to 15 minutes aside to go through it. And so this is really exciting for us. Thanks for doing the blog and thanks for coming on.
Yeah, this is good. I love having the blog. I like connecting with people. It's all good.
How did you get the blog started?
Well, I was really inspired by other bloggers, and so I started in the financial space like 8 years ago. So I'm an engineer. I have no financial background. I just started reading books. I had an audiobook subscription, so I listened to books, Kramer and Rich Dad Poor Dad and Mary Buffett, and eventually I found my way to Jay Jun's Old School Value, which was a great blog. Very educational, tons of great posts. And he had on there different blogs that he followed. So then I started finding oddball stocks and OTC adventures and shadow stock and all these. And I just loved it. I thought these guys are amazing. They're finding this stuff that's so cheap and they're right. And then it goes up and it works. And it's just there's not, I used to go on Seeking Alpha and I would follow these big companies, Wells Fargo or Microsoft or something. And there'd be 10 articles a day. And you just start how can you even compete against these people, right? But then you got these other small-time guys that were really finding good stuff. And so eventually, I wrote up a stock just on Jay Jun. He used to have this this chat board. And so I wrote up one on there, and then I wrote it up again onto Seeking Alpha. Mm-hmm. And it really made me know the stock. So before that, I didn't ever know much about my stocks. I would buy them because I read it on a blog or because I read it on Seeking Alpha or something. Right. But then once I had to write about it, I had to research much deeper. And so I got to really feel I knew more about the stock. I was more confident. It helped me improve. So then when I found another stock I wanted to write about, but I didn't want to do it on Seeking Alpha again because they have this stupid paywall. They hide everything. Yeah. And so I thought, well, I think these other guys' blogs are amazing. I'll start my own and then just kind of see how it goes. And I didn't think it would get as many posts as I've been able to write. I figured I would have a couple ideas per year, but then it's just kind of snowballed. And it helps. I do it because it helps me, really. It's it has made me improve so much more as an investor. It also has, I've met so many people from it.
Well, when you write well and you have interesting ideas and you're looking at possibly the most nuanced, darkest places in the market, you get some followers.
Yeah.
Yeah, I remember a lot of those blogs around the same time. And, one of the things that always bothered me about it was I'd go and look up some of these stocks that they're writing about, and I'd find that they'd already moved a lot. And, I wanted to be well, wouldn't it be better, if I knew about them before they wrote them up? And that's we start, so I sort of, inverted the question of how to approach these things. And that's how we started down the path of looking at, really obscure stuff and just sort of being an expert rock flipper. And, it's humbling to be in the presence of an even more expert rock flipper, because I think you flip over and you look for things that I don't even think we would find. So our hats off to you. You mentioned a little bit about your background. There's a lot of there were a number of different things that I wanted to ask about, but just walk us through sort of your evolution as an investor. So you started doing a little bit of blogging. You start on the mic. Did you start on some of these microcap and dark stocks and just sort of stay there, or did it evolve over time?
So no, I started with huge ones. Like I started just by, I had no background in stock market anything. So when I started reading these books, like I didn't know what common stock was or what a dividend was or anything. And so I wasn't comfortable with these tiny companies, right? Like I read these Mary Buffett books first. Like the first time I bought stocks was after a Mary Buffett book. It was called like with the Warren Buffett stock portfolio or something, where she laid out like 20 of his stocks. Why does he own them? The history, kind of like some general conservative estimate of value based on like average PE multiple and stuff over the last 10 years, something like that. But anyways, the ones she wrote about were these huge, durable companies that have been around for 100 years, And so that's what I bought. So I bought like Wells Fargo, and I bought Microsoft and Union Pacific and Oracle, and I don't know, a handful of them. Those were the first ones I bought, right? And then, and I used it was like a value approach. So they were cheap, I think, in my mind, but then, like I said, I would follow them on Seeking Alpha, and you just start seeing all these other people following it and writing about it and knowing way more than me. And I just like, I just start thinking like, how can I compete with these people? Like, it's for me, it's a hobby that I do after work or at lunch break or whatever, like while the kids are falling asleep. And so then I, as I found these other blogs, like Old School Value and Whopper Investments, and these ones that they were writing about these little stocks, I started to kind of dabble in those, buy some of those stocks, and they went well. And it was a lot easier for me to follow because there was no news, right. I want to know about the stock. So if somebody writes an article or if I see a filing or something, I want to read it, but I can't keep up. I can't read 10 Microsoft articles a day, right? Mm-hmm. It's not possible. And so I just kind of kept going in that direction. And then, I didn't really know what dark stocks were until like I started my blog and then like people started emailing me. So I wrote up a stock, I wrote up another stock. You write up a stock and then you post, I would post the link like on the Yahoo message board or iHub message board for that stock and just say like, I wrote this thing up. And I'd get an email or two from someone on there that was like, oh, that's interesting. You like this stock. What about this other one? And then
was it intelligent life out there, or was it semi-intelligent life, or was it like a Wall Street, sort of level of response? What did you find?
It's a mix. It's for sure. Like I get some messages from people that are just, they don't know what they're doing, and they're recommending something that's just total junk, penny stock crap. I've been contacted by a few like stock promoters that want me to write about something that's just like their thing that they've probably been paid for. But there's some very smart people. So there's some really, some people have emailed me and like, oh, I've been doing this for decades. My biggest positions are these ones, and they'll name them off, and they're like huge positions. And I'm just like, man, these guys have really built up some major wealth this way. So there's for sure some very smart people that have contacted me. And that's how I got into dark stocks. It was like, I wrote up some of these smaller stocks, and then people started emailing me, hey, check out this one, check out this one. And it was like, oh, this one has no filings. What do you mean? And it'd be like, oh, you got to go to their website. They have something posted on their website. Or it'd be like, no, this one, they don't post anything. But if you contact the company, they'll like mail you a paper copy of the annual. So then I start doing this stuff and finding these other ones and kind of just going more and more into that rabbit hole.
So you're kind of touching on this, but like, can you just give us at a high level, like what your search strategy is? Is it people reaching out to you from other stuff that you've written up at this point, where it's like, hey, look at this, hey, look at that? I mean, we've been involved in a few things, but like, systematizing the search strategy I find is kind of difficult. So I'm curious if you have any tips, tricks, et cetera, that you've learned over time.
So the way I started, and I guess the way I still do it, is kind of this like crowd of people approach. Like when I started, I was following these different blogs and following these different people on Seeking Alpha. And so whatever they talk about, then I would go look at. Like, if you find someone you think thinks like you and is smart and knows what they're doing, like if they like a different stock, it's like, okay, I should go check that out and see if it's right for me. And so that's what I was doing. And then once I started writing, people started contacting me with ideas, oh, you like that one? How about these? And list out a few others. And so that's still basically what I do. And then like I follow people on Twitter, and so people will, like, I have a long list of stocks that people have mentioned to me, and I just kind of keep that list, and I periodically look back through it. For years, like I have the same stocks on the list from 5 years ago, and I'll look at like what is down a lot over the last year. What's at a 52-week low? What's down 100%, 90%? What's like, what looks bad, and I'll go and investigate those, look at those. I have friends, I know people who they've done the A to Z thing, or they read filings just constantly. I don't have time for that. Like, I have a full-time job engineering. I have kids and a wife. I like kind of do this in my spare time.
Yep.
So I pretty much, I guess I'm kind of just like patient with this long list. When I noticed the same thing you did, like when I used to follow and look at these stocks more from like OTC Adventures, like it'd move right away. And it's like I missed out. I can't buy it. But so what I would do is read the articles from 2 years ago.
OTC Adventures, that's Dave Waters, right?
Yeah.
I think we're gonna have him on soon. It's the same thing. I mean, like they just, it's interesting because if it's small enough, you can sort of become the opinion setter on the, you're the one that has the leading opinion on this company whenever they put something out, and that's always a good place to be because like, if you see something that happens, and you can process it faster. That's like you actually have a real analytical and like processing advantage in this space of the market. At least that's what we found. I don't know if you found the same thing.
Yeah, you know about it, and then like whatever new comes out that adds to the story, it's like another piece of the puzzle. It's easier to add it in.
So a lot of these companies are pretty secretive. Like, how do you go about getting information? Sometimes it's on their website, sometimes it's not. You've seen everything? I'm sure it's all over the map, and maybe that bleeds into some of your perhaps war stories. If I recall, did you work with some other investors to try to like get information from a company, and like you wound up having to sue in like a Delaware Chancery Court or something, if I recall?
Yeah.
We have investment battle stories, but I think you might just have information gathering battle stories. I don't know.
Yeah, it's all over the place. That one is still ongoing. So yes, a group of us. There's a company, and it looks super cheap if you just look at their products and their stuff on Amazon, whatever. But they haven't filed anything. They haven't put anything out for years, and they're incorporated in Delaware. So the Delaware state law is like, if you are, as a shareholder, if you request records, they have to give them to you, right? Like a balance sheet, an income statement. You have to be able to inspect it. But these guys, they just won't do it. And they're just basically daring you to take them to court. So one of us did, and that's been ongoing like for years now. It's like, I forget, it's a year and a half now or something in the courts. And now there's another court date set for later this year. And it's just like appeal, deny something. And so like some of the companies, a lot of them, once they deregister, at least the ones I follow, they're like real companies, real revenue, real products. So I invest in all these tiny little penny stocks, but they're real companies. They're just very small. And so a lot of them, once they deregister, they keep filing on OTC markets.
Mm-hmm.
And so that's usually where I go. That's where I go for all my like research, OTC markets and a stock chart. But so some companies post just on their own website. They don't post anywhere else. And so if you go to their website, they'll have like a financial investor relations page or something, and they might post some things there. They're not always audited. Sometimes it's just kind of like, there's one I own, the guy puts out just kind of like a quarterly like CEO letter, but it's like a paragraph, and all he says is like revenue, so the numbers are very almost nothing.
Right.
And some of them, there's one, they send out a paper copy only of the annual, and they don't put anything online because they think if they put it online, their competitors will see it, and it's a disadvantage. Some of them totally disappear. Some of them require you to sign an NDA, and those I try to stay away from because you can't even talk with other people about it. So what's the point?
Right.
Right. Huh. So that's interesting. There's a lot of different sort of threads to tug on there.
And so
Eric, which one do you want to pull on?
What's your due diligence process? So if you have a company that's, the CEO is just putting out a paragraph saying, here's the revenue, where do you go from there? What's next?
Well, first of all, I'm happy to see some information when I see that. It's better than nothing. And it tells me, likely most people are thinking like, this is ridiculous. I'm not going to buy that stock. So there's less competition for me to own it. But when I hear about a name, the first thing I do is pull up a stock chart and I look at the chart. That's like number one. So and I want a stock that's at like a long-term low, because I want to buy at this, I try to buy a lot of these tiny little companies at the point of like maximum pessimism, when the market just hates it. They think they're going to die. They think there's nothing left. And so I like these charts where the stock is down at a 30-year low or a 20-year low or something. And it's just low and flat and boring. Because at that point, like, I don't think anyone else is looking at it. Everyone who has,
they own it, if they do,
Yeah, literally, like a lot of these, like, it's just, they rarely trade. And when they do trade, you think probably like it's an estate sale because someone died,
Right.
So like I start with that, and I'll throw away, like, I only want low priced stocks because they move more. I don't want a stock that costs $100. I want a stock that costs like 10 cents. And then I go to OTC markets and I get a filing or whatever I can. And I want like low share count because that moves more.
Mm-hmm.
And I want, and then I kind of look at like revenue and book value and earnings. Most of my stocks don't have any earnings, but, cheap relative to those things. If there's any assets hidden, is there any preferred or warrants or anything? My favorite stocks are these ones that have like a few million shares outstanding and there's no warrants or anything. So it's real clean.
Yeah.
Low share count, high inside ownership.
Let me ask you a question. Do you tend to own a lot of them? Like, it sounds like with this strategy, you kind of have to own a lot of them.
Yeah. So I own 50 or 60 stocks right now. And it's because like I see all these ones and they're all this similar. Like they all, I think, have this potential to go way up. And if a stock is like a $3 million market cap, like it doesn't take much to move it, like one order, one contract, one CEO change can make a huge difference and double, triple a stock. And so I see all these stocks that are like, I think that one's going to survive another 10 years. It's priced so low that it can't go any lower. So like, I might as well buy it and see what happens. Yeah. But I don't know which ones are going to move.
And do you just like hang a bunch of buy limits out there? Or is that how you sort of build the portfolio? And how does that happen? We own stuff that trades by appointment, and like if we see a big bid out there, like I kind of know who's involved in it, and I'll call them up and I say, like, "Is that you?" And they'll be like, "Oh yeah, it's me." No, it's not me. And like it's like that kind of thing. How about yourself?
I have seen some like that where I see some buying activity and I'll message someone, was that you? And they're like, yeah, that was me. I saw it. And so I do a lot of just kind of watching everything all the time. So I check my stocks like constantly throughout the day. I'm always looking at the bid and ask, what's available, what's for sale. And I'm kind of, like these stocks are very illiquid. So I buy my positions over months and years, like just kind of all the time. Because I can't get enough at one shot, and the chart's always moving around. The stock's always moving. News is flowing. So it's like if I own one and then some news comes out and it's like, oh, the turnaround might actually happen. Oh, they're not dead. Oh, they filed something for the first time in 3 years. Like maybe there's something there, so I'll buy some more. And usually I kind of take what I can get. I don't have a lot of orders just sitting. Because I've missed out on a lot of them where the bid and the ask is there and I try to put something at the low end and just wait, like a good till canceled limit order, just wait. And then the stock runs and I miss it. So I don't do that as much anymore. Sometimes I do, but more than that, I kind of like, I'll take what I can get and then just keep watching constantly. And it's like, oh, a few thousand shares shows up available, like take it.
Yeah. I think we've done a similar thing. We often look for some size and then sort of, I guess getting out, is it the same deal?
There's no way out, man.
It's like, what's the scaling out process like?
Yeah, Eric and I have a buddy who once coined it as like sort of, you see some activity and you sort of want to get out, so you sort of start to feed the birdies, as he mentioned it, and sort of like, you throw a little out there, you throw a little more, you throw, eventually, you've gotten it down. Is it the same is it a similar process for you, or is it a little different?
Yeah, I mean, there's not really a way out other than that, or just waiting for some big event like that. Like I cannot, I own way more than 1 day's worth of volume on a lot of these stocks because they rarely trade. So it's like, you can't just sell out. So to get in and to get out is like a little bit at a time. Like I buy in a little bit at a time to get out. Most of the time when I sell, though, it's like a big event. Like what I do is I buy these stocks, and every one of them I think has this potential to go up like 5x, 10x, 20x, like big changes. And for my strategy to work, I have to have these ones that have like huge gains, because I also have a lot that die. They go down 80%, 90%, 70%, and they're just kind of like, it's gone. So a lot of times I'm waiting just for some event to happen. And so that's why I want these ones that are low priced, 1 cent, 2 cent, 20 cents, and low share count, so that the supply is low when that demand comes. And so sometimes they'll put out a press release or announce an order, or sometimes there's nothing. There's no news at all, and the stock jumps up 100, 200%, and volume is through the roof.
Yeah, we've had a few of those lately. We call it being chosen.
Yeah. And it's like some pumper, I guess, like on a chat room somewhere, maybe, who knows? But like,
who knows?
We have no idea. We just see it going on.
You just wake up one morning, it's like, okay, this is what's happening today.
Eric sends me the gif of the Toy Story where with the crane comes down and plucks the alien out, and Buzz Lightyear, he's being drawn away. He's like, I've been chosen. And that's just, like, there's just like no more perfect gif for that in that environment. But like, that's what's happening these days, and I don't understand it, but it's happening. So
I mean, that's part of my way of doing stocks is like, I go in those same types of stocks because I'm trying to get, I'm looking for stocks that will give me the maximum price movement, right? I'm not trying to be the smartest guy in the room. I'm not trying to sell books or anything. I'm trying to just get the most money I can out of this. And so I look for these stocks that I think will move the most. So they're like these companies in areas that I think have high potential, security or biotech or medical or whatever tech stuff. And
something you can get excited about.
Right. Something that someone is going to get excited about. I own some that are these boring industrial companies that just like, they have a bunch of real estate or something. And I own some of those, but they're less exciting to me. And so I think, like the Momo crowd and these penny stock pumpers, like they look for the same types of stuff I do, because they're trying to find stocks they can push easily. Right. And so sometimes you see a big jump and it's like, well, I guess they found my stock, whatever, I'll sell it. And then 2 days later, it's back down and buy back.
Yeah. So from your blog, you've had some adventures over time. And part of our podcast, we started this for a couple different reasons. One was to meet interesting people like yourself. And the other is to sort of just share our experiences and learn from the experiences of other people. And so from your blog, you've had a lot of them. I don't know if you've had any that you'd like to share with us and people that listen to our podcast, but
yes, I got a winner and a loser. So what do you want first?
Just give us the loser. Losers are more fun.
All right. So loser. So these ones, it's both stocks I've written about on my blog. Like I said, I own these things for many years, and I have no problem holding for many years. So I buy over many years. I'll buy it. Some I buy and it's a tiny position. And then like years later, there's some change or something. And so I'll build a much larger position. So like even after I write about a stock on my blog, oftentimes most of my buying is after I write about it. So I'll write about it. And then just kind of as time goes on, like as things change, I'll keep buying more and more. Or if it's junk, I'll just let it sit and rot.
When you're writing about it on the blog before you've bought a full position, is part of that to sort of see what other people may know about it? So maybe it can help your sort of due diligence process since you have a good readership now?
No, I mean, I buy a full position before I write about it. It's just that over time, that definition of full position changes.
Make more money, your portfolio grows, and the full position becomes bigger.
Right. So that's definitely some of it. A stock that I wrote about like 5 years ago, I mean, my portfolio is much larger now than it was then. So there's some like I bought and say it was like 4% of my portfolio, and now it's half or quarter of percent, just because like it didn't grow as much as the rest of mine. So I'll buy more.
That makes sense.
Or it's like I'll buy as much as I have available at that time. Like a lot of these, you can't get as much as you want. So, you're able to get, say, like, so I own 50 stocks, right? So that would be an average of 2% per position. Like I have some that are up around 10% positions. I have a lot of positions that are like less than 1%. They're just like these little ones, but at least I follow it if I own it. So sometimes I'll buy what I can and then write about it. And then 6 months, a year later, like for whatever reason, more stock is available and I'll just keep buying it.
Mm-hmm.
And do you sort of leave little residual positions in your account just so you've kind of kept a tab on it, at least like out of sight? It's not out of sight, out of mind. Is that something that you do as well?
Yeah, for sure. I mean, I rarely, like I do way more buying than selling. I rarely sell. I sell, most of the times when I sell, it's some giant movement, some huge event happened, and I sell into that. Otherwise, I'll just kind of hold. Like I don't do selling based on like, oh, it hit my valuation target. Like I don't sell like that, because that, the market, if the market thinks the valuation is 5 times higher than I do, why sell? If they're going to keep pushing it higher.
There's a very prominent stock right now that's trading on that very premise.
Yeah. And that's when you see those, that's what makes me think like, why sell? I had one earlier this year. It went up 500-600%. I sold it, and then it kept going up like 5-6x after that. And I'm like, why did I sell?
Yeah.
So we got off track there. So the
Okay, the loser. Okay, so it's Vicon, VCON, used to be stock ticker VII. They're this tiny security company that I wrote up on my blog like a few years ago. They make like
You still own it?
I still own it. Yes, I do.
You do not.
It's super illiquid, super tiny, rarely trades, but they make like video management security systems for surveillance, right? So like I said, I'm trying to buy these stocks that sound like they could do something exciting. It's not like a melting ice cube. I'm down a lot on this stock, but I have sold it. This stock has had a few like of these big spikes I talk about, like 100% spikes where I'd sell, then I buy back. So I'm down a whole lot on my average price, but I have made some. I don't know really where my position is, but
You've recouped some trading it around.
I have, right? So I bought like say about 5 years ago, because it was kind of this cheap. It was cheap if you look at revenue. It was losing money, but it was like, man, if they can turn around and stop losing money, it could be a big winner. They had someone who owned like 46% of it. And in 2018, in March 2018, this company, Chemtrex, CETX, bought that 46%. And they installed one of their guys as CEO. And so at that point, I'm like getting excited because I'm like, oh, there's some change. Like I'm always looking for change. So maybe something will actually happen with this tiny security company and it won't be a dud. That's my hope. And then, right. And then a few months later, they changed their name, the stock ticker from VII to VCON, and they delisted from the New York Stock Exchange. And so at that point is when I wrote it up on my blog, because there's like some change event here. Like, oh, they have this new CEO. They have a new big owner. They changed their stock ticker. Like, oh, something's happening. Like, this is great. So I write it up on my blog. And I mean, now it's just been straight down. I mean, so they, right away they announced a restructuring plan. And here's a quote from them. So the CEO says, "We have now taken a number of steps to put Vicon on a path for long-term success. We believe that Vicon has a bright future, and with the changes we're making, the company will be more competitive and valuable over the long term. Our immediate goal is to get the company into cash flow positive situation, in the next fiscal year." Well, if you look at the chart, it's just a nosedive from there. So like they have not followed through, and it just gets worse. So like 6 months later, they deregister from the SEC. So that was in 2019, early 2019, and they just stopped communicating. So this is one of those stocks where they deregister. So I own a lot of these dark stocks, and it's just because I owned them before they went dark. And this is one of those but they deregistered and they just never talked again. No communication at all. And then later in 2019, all of a sudden there's a stock split, 1 for 2,000, but they didn't announce it. They didn't tell anyone. It's just like all of a sudden the stock.
They sent something to FINRA that said we're doing 2,000 to 1, and by the way, cash out anybody who has less than 2,000.
I guess like the only way you know about it is if you go on the OTC Markets site, like on the security details page for them, you can see that it's there. And you can see it, of course, in the chart, and the trading is way down because now it's super illiquid.
Did it show up on FINRA's daily list, or is that not something that you check?
On what?
Did it show up on FINRA's daily list, or is that something that
I don't know. I don't check that. But yeah, they did this in the dark without telling anyone, and then so then the stock dropped way down. And I was like, oh geez, so the stock it went way down, and the market cap was something like $100,000. And this is a company that had 30 million in revenue.
Oh, wow.
So that's where, you asked, like, how do you get any value out of a CEO telling you only the revenue? Well, right there, like, it has to be cheap. Like, I don't care what they're doing. $100,000 for 30 million in revenue is cheap.
Well, and you have some idea of what the rest of the capital structure looks like, right? Just because you've seen prior.
Yeah, there's the question. So, yeah, so right away, I'm like, this is crazy. So I start trying to buy. I can't get any because it's so illiquid. I got like literally one share a few days, like, which is just so aggravating. But like for actual
we know this very feeling, and it's we sympathize.
Yeah, so like I said, they just stopped communicating. But their 46% ownership was from this company, CETX, which is a public company. They have filings, right? So if you go and read CETX filings, you can see some information because this is their like subsidiary or whatever. And so I read some CETX filings, and they casually drop that the share count has something like doubled at least, but I don't know for sure. It's just that they say, what did it say? Oh, the company acquired 15 million shares of Vicon in exchange for $300,000 owed by Vicon to the company for services provided, which sounds to me like they charged themselves for doing consulting or something stupid. And then they sold themselves.
It sounds like it's possible that this company is going to not treat the minority holders.
Dude, it's horrible. But they only had like 17 million shares outstanding. So they had 17 million shares outstanding, and they sold themselves 15 million shares. So at that point, I was like, okay, maybe I shouldn't be buying because I just don't know. But then
so it went from 15 to 17. That's conveniently enough to give them 51% in complete control.
Well, yeah, but in the filing, they also said they had gone. So previously, they were 46% shareholders. They said, oh, now we're 70. They went to 70% shareholders.
Oh, wow.
So, but if you calculate based on that change, 46% to 70% with 15 million shares, that means the outstanding should actually be 62 million. So they somehow more shares popped up and they gave them to someone. I don't know who, probably. So it's just like, oh, geez. So now the share count is 3 or 4 times, I guess, what it was. I don't know.
Question mark, right?
Question mark.
We only one or two where the share count's a question mark too. It's a common problem that we encounter.
So that's like one question I frequently ask these dark companies is like, is your share count, do you have any preferred or anything, or is it the same as it was when you last filed a 10K, 6 years ago or something?
Yeah.
Oh.
And how often are you reaching out to companies in the management teams?
Pretty frequently. I mean, I don't do like a lot of interviewing. I used to do that more with like questions about the business and trying to figure out their positioning and stuff like that. I don't do that so much, but I'll pretty frequently email them just trying to get some information. There's one company that I know they own a bunch of like real estate, but they have no information on it. And so like, I guess at their, they don't list any email address, right? And I don't like calling on the phone. So I just take a guess at the email address based on their name and like the company name. And after a handful of guesses, like I got it right and the email went through. But then they just respond back like, we're not a publicly traded company. We're private. Like some of them consider themselves. Yeah, buzz off. So I usually, my questions to management are just things like that. Like, what's your plan on filing after you deregister? You haven't had a filing in 2 years. Like, when are you going to have something else? And they'll give me why or why not.
You pay any attention to like what state they're incorporated in? Because Delaware, you mentioned Delaware, and you're like, that's the best probably that you could hope for. Lord help you if you have to go to Nevada or Maryland corps are pretty tough too, right? Like, is that something that you've spent some time on, had some experience with, and is that sort of like a disqualifier in your mind?
It's a red flag if I see Nevada. Now that doesn't mean I won't buy the stock, but it's just one piece of the puzzle, you know. So, like most of them are Delaware, so I like to see when it's Delaware because I know at least state law's on my side. Right. Not that it's easy to enforce that, but if you see Nevada, it's kind of like, I mean, I don't like it, but still, if something is super cheap, I'll buy it anyways.
Okay.
Interesting.
All right. So maybe the anatomy of something that maybe worked out. How did
right. So
like, what typically happens when it's working? Is it a series of like increasing amounts of information that come to you, and then like maybe the company wants to tell other investors and maybe then uplist, and like is it some combination of those things, or am I just being too simplistic about it?
No, that's part of my strategy, right? So a lot of times I'll buy these dark ones, and it's like the company doesn't even have to improve operationally for the stock to be a winner, because if they aren't communicating, if all they do is communicate, the stock will move. Sometimes you'll see stocks just like a company hasn't filed anything for 5 or 10 years, and then they'll all of a sudden put out some press releases, and people watch that and they'll start buying it. It'll go up, it'll double, it'll triple, just because there's some information flow. And that's just kind of telling people like, oh, this company is not dead. They might actually do something. So that's part of the story on this one. So this next one has been a big winner for me. Just recently, it shot up a lot because they announced a very, very large contract, large enough that you question if it's real. But so...
Well, maybe that's another conversation.
But the stock movement is there, so like I don't care, you know.
Right.
I still own it. Yes, so I own this EKCS, Electronic Control Security. I've owned it since like about 2015, I think. I've wrote it up on my blog a couple of times.
Eric and I have no position.
Yeah, we do not own it.
Okay, it's another.
It sounds really like regrettably we have no position. So can you?
I mean, they can go one of two ways. So either it goes like this one that goes up a lot, or it goes like Vicon, which just dies. And so
how did you find this one?
So this one, it was a friend of mine, you know, who emailed me. Like there's one guy who gives me most of my ideas. So there's one guy who I met through my blog, and he has been doing this for decades, and he just knows everything. Like I'm never able to tell him a stock he doesn't already know. And so he'll send me ideas, like lists of ideas. Hey, check these ones out, and just like name off 5 or 10 tickers.
This may be something we could put a pin in till the end, but there was a recent regulatory change, and there were a lot of comment letters that went in advance of that. Was he one of the commenters?
I don't think he was on the most recent.
Okay.
He's had so many times like sending angry letters to the SEC that he's kind of given up.
Got it. All right, proceed. Just, like there were some colorful comment letters that went in.
Yes, which there should be. I mean, it's aggravating.
Yeah.
So EKCS, right? So basically, the way I invest is I own all these stocks, and like I said, I need some of them to be these big winners to make up for the dead stocks. And at the moment, EKCS is one of those. Who knows if it'll stay? It could go back down, but. So years ago, I bought because they had been awarded these. So they were dark. They had stopped filing. They had deregistered in 2014, and then just nothing came out like for a year. But they had on their old filings these huge IDIQ contracts from the government worth up to like $300 million. And the market cap was like $250K.
What are IDIQ contracts?
Right. So indefinite delivery, indefinite quantity. So the way these government contracts work is their people, like their agencies are not allowed to just go buy something from, you know, any company. It has to be approved. It's taxpayer money. So it's got to like, there's a lot of red tape. So for if they want to buy like a diesel generator, if they want to buy a car, if they want to buy anything, it has to be like an approved purchaser. So companies get to be approved for whatever. So EKCS, they do also this perimeter security. So if you have like a power plant and you want fences and you want surveillance and you want some like security tags to go through the doors, like they can set all that stuff up for you, right? And so government agencies that would have, say, prisons or military bases or something, and they want to have security, like EKCS was one of the approved vendors they're allowed to spend money with. So IDIQ contract, all it means is the government has approved you as a vendor. Someone could give you a contract, but there's no guarantee.
Right.
Got it.
So you can get anywhere from 0 to 300 million, but it's never going to be in excess of 300 million. But it could also be nothing.
Right. As it
So
turns out,
they had all these contracts on the books where the government was approved to spend up to X with them.
yes. And it was just like comically large versus the market cap, right? You're like, this stock is $250,000. They have, just like a couple million in revenue. But then they have these contracts that are huge. And it's just like, man, if just one of those hits, it's going to be a big winner, right?
Yeah.
That's my thinking when I bought it, right? It was just like, I think, and they have this CEO who's like in his 80s. And so that point of view is also like, well, something has to happen. I don't know what's going to happen, but he's got to like sell the company or give it to a kid or something. And there must be some kind of change. And then on the side, you have this potential for a huge, huge gain if the government, even if they don't follow through with an order, if they just announce an order, there's going to be a huge spike in the stock, right? So those are all the reasons I was buying it. As it turned out, like not much came from those big IDIQ contracts. Like I think they did get a few million maybe in revenue, but nothing much.
Right.
So like I said, the company deregistered and they just stopped talking for a year. There was nothing for a year. And then in 2015, they put out a full year worth of filings, like 4 quarterlies, 3 quarterlies, and the annual, like all in the same day. And they got current again. And then they disappeared again for another 5 years. But in those 5 years that they were disappeared that second time, they, when I talked to the CEO, he was very forthcoming. He would tell you about it. It's just like, it's the CEO is also that like, he's not taking a salary because they don't have the money to pay him. The company owes him a bunch of money. It's a tiny company. So he's probably also doing the payroll. He's probably also HR. He's probably also all these things, right? And he's old.
Chief cook and bottle washer.
Yeah. And so during those times when they're dark, they were sending out like a letter, like a physical letter mailed, written address to you if you were on their list of shareholders. Not even list of shareholders. Like if you had contacted them and said, I want your letters. So and I blogged, I mentioned this on the blog. So a number of readers emailed me and like, can you get me on this list? and I'd email the CEO like, hey, this other person, can you also send the letters to them? And it was just like a quarterly letter that would say,
so weird.
It's super weird. And it didn't come through the broker or anything. I didn't get it like from Fidelity or Schwab. It was just directly from the company, like from his secretary or something. But it would be this letter that's a little bit about like the business. And then it would have like 3 financial, like we have this much revenue, we lost 100K. And like, that's about it. And then, so that went on for a few years. Then a few months ago, they started, so they put out one annual at the end of 2019 and then nothing again. And then a few months ago, so right now we're in March 2021, like 6 months ago, they put out like 3 quarterlies on one day. And then 2 days later, they put out 2 annuals and 3 more quarterlies. And so they did it again where they got like all caught up on one day. And so you see this and you're like, oh, that's exciting. Like something's happening. I don't know what's happening, but there's got to be something. Why would they do that? And then they started putting out some press releases. So like they don't normally put out any press releases, no communication of any kind. But then, a few months later, they put out a press release about how they have a new line of like water filtration monitoring something. They put out another press release like in January this year about how they've engaged like a marketing firm to help them reach more customers. So they put out a few of these, and so I bought a little bit more of the stock because it's like they're doing something. I don't know what they're doing, but like at least they're communicating.
And were your letters still handwritten?
No, once they came current again, they stopped with the letters. The letters were typed, but the address on the thing on the.
No, I know. I'm just being funny.
It's so ridiculous, but in the middle of all that darkness, the stock did run up like 10x because like geo investing talked about it. But I missed it. I didn't sell into it. I was just like, I don't know, slow that day or something. So it went up and it came back down. But then like a few weeks ago, they announced this $85 million contract that they've signed for phase 1 for some North African country border security. So the phase 1 is 85 million. They say 85 million is their share of that. And the market cap is 2 million. So
wondering whether or not it's real. You got North African country, you know, like I feel like you've got, you know, a contract in the Sudan.
I mean, you can question if it's, you know, like, so I haven't sold it. I still hold it because like, so right now the market cap is 10 million or 12 million or something. But it's like, if that actually follows through, like the stock is up a lot because of that. And if that actually follows through and revenue actually starts showing up, it's supposed to start deliveries like later this year, I think.
And are they still current on their financials, so you'll be able to see that if it happens, or is it?
I mean, you know, it's day to day with them, but they are right now.
All right.
Well, we'll see what happens in a couple of months.
That's basically it. Yeah. So, yeah, that's that one.
Wow.
That's interesting.
And so that one is one I own. So both of those are ones I owned like for like 5 years. The loser, I did buy some more along the way when I thought something was happening. And then the winner, I bought more along the way a few times just as kind of like the story improved.
Right.
But yeah, it's this kind of patience and buying these stocks that look like they might die and hopefully they won't. And one is up a whole lot and one is dead.
I mean, it's a barbell approach, right? I mean, but then the convexity when it works on the good ones, hopefully more than makes up for all the ones that don't work, right?
Yeah, that's the idea.
Okay.
I was excited going into this conversation, and you didn't disappoint.
Do you have any tips for investigating some of these companies? To like any tips to like, are you monitoring like, I don't know, website changes? People do all kinds of crazy things. I listened to a podcast earlier this year where for a contingent value right, they had some folks parked outside a manufacturing facility monitoring whether or not people from the FDA, people wearing suits that might have been from the government showed up. You know, just I don't expect that level of insanity, but like,
but maybe we should expect that.
All of us have some personal level of insanity that they invest in this. I just was kind of curious to hear if you're willing to share any of yours.
Yeah, so the way I follow so many stocks is with conferencecalltranscripts.org. I don't know if you know about them, but you can go create a free account and they'll email you whenever any of your stocks has a filing or a press release. Mm-hmm. So, and they also have a feature where they'll email you if a website changes.
Oh, really?
So that is great. And so I use that. And so some of these ones that like they only post the updates on their own website, like conference call transcripts will email me when they post something new. Some of these stocks, like they have like a blog, like a president's blog or something on their website. And so I'll follow that the same way. I will look a lot of times when I hear about a new company and I'm wondering if it's real or what kind of, like I'll go and you can search different states incorporation. Like if you just Google like Delaware, company incorporation, like you can go and you can search and sometimes it'll tell you directors' names or the CEO's name. So you'll be able to say like, okay, at least the directors are the same or different from the last time they filed.
Right.
You know, I'll do sometimes that or looking on LinkedIn just to try to find names of people to try to contact. Because sometimes there's one company that like this tiny, super tiny company that hadn't filed in years. And I contacted them. I forget how I even found someone's contact info, but the guy emailed back and was just like, yeah, our CFO passed away and nobody has really done that for a couple of years. Here's the last thing I found on his hard drive. And it's like an Excel file of their like balance sheet from 2 years ago or a year ago.
Wow.
And it's like, well, that's cool. This is the more information than is available anywhere else. But So most of my snooping is around trying to find, info like that. I'm not parking myself outside any companies.
Not yet.
Not yet. Yeah, maybe as my operations expand.
I think it's a good place to wrap up.
I think that's a good place to sort of leave it off. This was a great conversation, Dan. Thanks for coming on and chatting with us.
Thank you.
We're really happy to meet you. We really like the blog.
Where can people follow you, listen to what you're up to, hear your thoughts?
So my blog is nonamestocks.com, one word. I'm also on Twitter at nonamestocks. Most of my tweeting is just saying I have a new blog post. But on my blog, there's like an About Me page that has my email, so people can email me there. I love hearing from people, talking with people. So that's the best way.
Very cool.
Awesome. Thank you. Yeah. Thank you so much for doing this. Really enjoyed the conversation. Enjoy all your material. Please keep it up. And from where we sit, if you want to hear more episodes, we're available anywhere podcasts are available. You can check us out at inthemarkettrenches.podbean.com. You can check us out at snn.network or the SNN YouTube channel. That's youtube.com/SNNwire. We'll talk to you all soon. Thank you again, Dan.
Thank you.
Thanks. Bye, guys.
The information in this podcast is educational in general nature and does not take into consideration the listener's personal circumstances. Therefore, it is not intended to be a substitute for specific, individualized financial, legal, or tax advice. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a final decision.